Progress for Powell is pain for Main Street. We've been talking about this one while the suits get to celebrate, sipping their champagne, flying around in their PJs, having a good time. We see in the Main Street, we see for the common folk, the pain, the stress, the frustration, even though the markets have been going back up, right? We see when we go to the pump, we see when we go to the grocery store, we see when we go to pay our utilities, we see when we go to renew our lease on our rent, when we go to try to buy a house. It's a different situation for the common folk. Meanwhile, Powell, the Fed, and the talking head pundits on CNBC are cheerleading like they've won the fight against inflation and like everybody should be happy that Bidenomics is working and everyone should feel warm, fuzzy, and sweet inside for Christmas and the holiday season. Let me know in the comments down below what you guys think about Bidenomics and how this program has been working out. And let me know in the comments down below if you think that the Fed has won the fight against inflation. Let's get on into it, folks. So this is going to be a Christmas weekend. The markets are down. What's exciting here is we only have 4 more trading days for the traditional stock market. And for the crypto market, we get to trade by ourselves all through this weekend and into Monday. So let's be watching the crypto space here. Sometimes during this opportunity when we're the only casino available, this is when we get some exciting action for the crypto space. Let's watch this. Bitcoin just chopping sideways. You can see this back up to about 43,700, chopping sideways. Okay. We'll see even a pullback here into the low 40s, right? Could easily be done. But we'll see if we can break through that 44.8 level, 44.7, 44.8, depending on your exchange, is where Bitcoin reached out to. For Ethereum, 22.96, so just under 2,300. And then we see for XRP at 61.8 right now. Okay, XLM, 12.5 cents. And the DXY did come back down here to finish off the last day of the week, came down to almost 101. Okay, watching that one. And that led to actually our silver and our gold moving back up to finish off this week. Back above $24 for silver and gold back above 2,050. Okay, now for the stocks here, NVIDIA coming back off this most recent all-time high that got set here and tapping off this level above 500 again. Okay. 4 more trading days for the traditional stocks. Amazon trending back up. S&P 500, 4,754, not far from that all-time high. Dow Jones just set that new all-time high at 37,621. Okay, and your NASDAQ 100 index is back up here as well. So the Christmas rally did come on in. We'll see if it continues through the last week of trading. Markets will be closed on Monday for Christmas, and then they will open back up on Tuesday. And it's Tuesday, Wednesday, Thursday, Friday will be our last days to watch that trade. Solana versus XRP. We dropped the video yesterday. It was pretty funny to watch some of the comments there. Solana, after bottoming out at about $9 in December of last year, it has done an incredible run up of 1,150% to about $100. Okay. And the point that I was making in my video yesterday was that I can poke some holes in the thesis for Solana, but I'm happy that people have made money. And I wish everyone the most success, whether you're trading meme coins, whether you're trading Solana, whether you're trading Bitcoin or Ethereum. I hope that everybody makes a bunch of money. The reason why I had to cover Solana versus XRP is I compared kind of what's coming. As we just saw in a most recent report, the co-founder of Quant, Powell, said that the XRP Ledger AMM is actually going to be outperforming the Uniswap AMM in multiple areas. And this is why I think that we have standards being set in XRP versus these other programs. They've got a pump, they've had some speculation, and that's great. But you can easily poke some holes in the thesis, in the argument for still being in these positions, or for, I see folks in the comments saying, oh, I sold off my XRP and I just bought Solana. Please let me know how that works out. I hope it works out good for you. I worry that it might not, because Solana's done an incredible run up here. But as we highlighted in the video yesterday, massive amount of market maker magicians coming in here again and pumping this thing up. It just so happens to coincide with the FTX bankruptcy process selling off over $1 billion worth of Solana. And they did this a couple times at about $60 and $70 for Solana. So something to watch there closely. Is this a real pump based off of fundamentals, or is this a pump based off of market maker magicians needing to cover their butts with the FTX bankrupt process? Anyways, let's get into it. We're going to be talking about the economic data here today. We got some important data points this week with the final reading of Q3 2023 GDP shows that the U.S. economy grew by 4.9%, below expectations of 5.2%, but nonetheless still quote-unquote growing. This marks the highest quarterly GDP growth since Q4 of 2022. It also comes as the Fed is pivoting and declaring victory against inflation. Well, the thing is, and I would argue that the reason why our GDP is still up, still quote-unquote growing, is because inflation is still present. That's why folks are paying more for the same products and services. That's why our GDP is still growing, and it's growing at the highest quarterly growth since Q4 of 2022, when inflation was peaking out at 9% based off their CPI lie. Now, speaking of inflation, they're touting that they've won this fight, and we see it right here. The inflation falls for the first time since 2020. The PCE finds. Okay, let's dig a little bit deeper here, right? Because they have so many different inflation gauges now, you can't even keep track. They change how these inflation gauges are calculated every other month, or at least a couple times per year. And so now we're talking here, the Fed's preferred PCE index fell in November for the first time since 2020 and indicated that price pressures continue to subside. The PCE index dipped by 0.1% last month, the government said Friday. Inflation was also unchanged in October. So we dipped by 0.1%. The increase in inflation over the past year slowed again to 2.6 from 2.9 in the prior month, marking the lowest level since February of 2021. The more closely followed core PCE rate, and this is my favorite, the core PCE that excludes food and energy rose a scant 0.1% in November. There is no reason at all to track any sort of inflation gauge and think that any sort of inflation gauge matters if you exclude food and energy. What are we talking about? If you exclude the two essentials, a roof over your house and putting food in your mouth, what else? I mean, I guess we should, what else are we talking about? And now they've gone to the super core, where it strips out used cars, strips out housing, shelter, energy, and food. Everything that matters is stripped to give us the super core. And that's why are you even talking about that data point? But this is how they're operating, and it's the same thing that they were doing during the lead up to the Great Financial Crisis. The same headlines. Oh, the Fed has achieved a soft landing. Everything's okay. The stock market's climbing once again. The stocks actually climbed even after the Fed did their first rate cut in the Great Financial Crisis. And then shortly thereafter, it fell over. The increase in the core rate over the past 12 months decelerated to 3.2% from 3.4% in the prior month. That's also the smallest increase since early 2021. Remember, this is still far from the 2% target, though. The gradual tapering of inflation persuaded the Fed last week to leave its key short-term interest rate unchanged at a rate of, or a range of 5.25% to 5.5%. Now, that was the decision that we got last week. The Fed at the three most recent meetings has given us a pause. No more rate increases. And everyone is assuming now that they're going to start cutting soon. Some expectations for even March. Bill Ackman, billionaire Bill Ackman, saying that they're going to cut in the first quarter of 2024. Now, the thing about this is just how long the Fed sticks to its guns will depend on how fast inflation wanes. The central bank predicts that the core rate of PCE inflation will slow to 2.4% by the end of next year, within sight of its 2% target. Yet some analysts predict inflation will slow even faster if high interest rates dampen the economy. Businesses would likely cut prices to drum up demand if sales slow enough. I.e., if we go into a recession, if our economy dies, then inflation will come back down even further. And the other thing that's already starting to contract would be the real estate reset that is underway. Now, we get plenty of real estate data points this week. I will be dropping another real estate update a full, complete real estate update in another video, but I wanted to track this data point. U.S. new home sales plunge in November. New residential sales fall for the second month in a row. So even though those rates are coming back down, new home sales are falling. U.S. new home sales fell 12.2% to an annual rate of 590,000 in November from a revised 672,000 in the prior month. The number is seasonally adjusted and refers to how many homes would be built over an entire year if builders continue at the same pace every month. The pace fell significantly short of expectations on Wall Street. Economists had forecast new home sales to total 688,000. So a huge, massive miss. New home sales are at the lowest level since November of 2022. Now, what's interesting is that we got the home builder confidence actually grew, and we saw new home starts and permits actually grew. Now, it was a miss from expectations, but it did grow. And so at a time when we have new home sales plunging, we have new home starts ticking up. And so are these builders going to be able to move these homes? I believe they will, but it's just a matter of what price, how many incentives, how many rate buy downs are they going to have to do to get that deal to go through. And so I say all this to say now is a great opportunity, I believe, to go beat up the builders. I've been saying it. I'm going to keep pounding it. Go beat up the builders because they have to move their homes. This is not like existing homeowners with the golden handcuffs where, they can still stay in their house as long as they keep their job, as long as they can keep making their payment, and as long as everything's fine, they're not going to have to sell their home. That's not the case for the new home builders. So go beat up the builders, but don't get caught in a trap where you're buying a home because they're giving you a 4% interest rate for the first year, and then you're going to have to readjust. Or they're giving you 3% for the first year, then 4%, then 5%, and then readjust. Don't get caught in one of those traps. Go beat up the builders, but go get a deal that you can afford, that you're going to be comfortable with, and understand that if you go into one of these new developments, if they're having to do all these incentives to sell you the home that you're looking to buy, and meanwhile they still have thousands of homes in that development to finish off, or on a smaller basis it's hundreds, but you go look at the big developments out in Texas, they still have thousands of homes to finish off in the development when you're going to negotiate with the builder. Use that as leverage. Okay, go beat up the builders. Now, we look a little bit deeper into this crisis right now. The liquidity crisis, the indicators are sounding the alarm. From Holger, I cannot pronounce that last name. He says, oops, a bank liquidity indicator sounds the alarm. Emergency loans from the Fed's short-term bank term funding program facility, the BTFP. It's tough to keep up with all these different funding facilities that they have. Whatever they got to do to backstop the whole system. Emergency loans from the Fed's BTFP facility keep rising, and they rose another 7.6 billion to 131 billion, a new high. So remember, these facilities, we have the main one that's going to be running out in March of this year. At the same time, the excess savings for Americans are set to run out as well. So not only are the banks running out of money, but the average person who at one point the homes, the households in America had over 2 trillion in excess savings. Now we're under $1 trillion. We have, I think, a few hundred billion left. But we're on pace to run out of those excess savings by the beginning of next year. So we're running out of money. The banks are running out of money, and their program to backstop the system is supposed to end on March 11th. So we're going to have to see what happens there. Now, Peter Schiff comments, he says, CNBC's Jim Kramer has done it again. In 2008, he declared that Bear Stearns was fine and not in any trouble less than 1 week before it failed. Now he's declared total victory for Powell and the Fed by claiming 2% inflation has been restored and a recession has been averted. So we got that Jim Kramer indicator saying that Powell has won the fight against inflation and that a recession has been averted. And that should be the one that really worries us, because we all understand inflation hasn't gone away. The question is, how bad of a recession are we going to have? Is it going to be a recession? Is it going to be a depression? Is it going to be a COVID crash, V-shaped recovery? That's kind of what I'm expecting. But nonetheless, we get the Kramer indicator right here. not looking good. QE Infinity adds this commentary. So the market is running an old playbook of buying stocks before a rate cutting cycle. It almost always ends in tears once the rate cuts start because it indicates the economy is about to hit a recession. You're essentially picking up dimes in front of a steamroller. This is the second longest that the yield curve has been inverted. And the yield curve being inverted almost always signals a recession is coming in. And this has been the longest yield curve inversion that we've had. There's only been one other time that it's been longer. And if this yield curve stays inverted out until February, then we would achieve the longest yield curve inversion ever. And folks think that we're going to avoid a recession. And Jim Kramer's telling you that we've already won the fight against inflation and we've avoided a recession. Yeah, okay. Give me some of what Jim Kramer's smoking. It must be some good stuff. And speaking of smoking something, I don't condone any of the behavior of the sort, but this is an absolute joke. How many more votes can he buy? President Joe Biden has announced he's issuing a federal pardon to every American who has used marijuana in the past, including those who were never arrested or prosecuted. So there you go. Merry Christmas, folks. Hopefully some folks can be pardoned who have non-violent crimes. I actually do stand for that. I do stand for that. Okay. If you grow a plant in your backyard that's relatively not that harmful, I don't think that you should be in prison for that. Okay. So congratulations. Merry Christmas. And it's an absolute joke because we just saw that Ukraine legalized marijuana. So you're going through World War, but you can light it on up. Okay. I'll leave you guys with that one. Let me know in the comments down below what you guys think, and I'll see you guys in the next video. Please make sure that you like this video. It really does help us. Drop a comment down below. And if you are new here, make sure you subscribe, hit that notification bell, and I will see you guys in the next one. Everything's at my website, zachrector.com. God bless you.